Cannabis investing. Cannabis investing, as we sit here coming to you from Illinois, where we're about to be the 11th state, I believe, to legalize recreational use of marijuana. It's definitely something that a lot of our clients are interested in. It's been a great investment for us. We've been running a portfolio for over a year and a half now, and it's had its ups and downs, which we'll talk about.
Cannabis in certain states has been legal on the state level for medicinal use, and then increasingly for recreational use on the state level. But on the federal level, cannabis is still a Schedule I controlled substance, and it's still illegal. So it creates some difficulty in how to invest, where to invest, what's legal, what isn't.
So talking about the investment opportunities themselves, what is the thesis for investing in this space?
Long term, you have this idea where governments are going to gradually be approving, throughout the world, approving cannabis for recreational medicinal uses on a very large scale. So you just get a growing legal market. And it's very difficult to try to say how big the market could eventually be. General expectation is in the next 5 years, it could be anywhere from $50 billion to $100 billion. So it's a pretty big opportunity.
And so our experience since investing has been akin to a roller coaster, perhaps. It's not exactly the placid investment environment one would think, since you're just growing a plant, but talk about the volatility to expect with this space.
So if you just take from the beginning of 2018 until the day that cannabis was legalized federally in Canada, pot stocks in general were up anywhere from 50 to 100%, more in some instances. The day it became legal in Canada until December 20th, they were down 80%. And then since December 20th, which was a big date because the U.S. passed the new U.S. Farm Bill, which takes hemp and removes it from Schedule I, so it's no longer a controlled substance. So basically, hemp is legal, which is where you get CBD oil. From there until now, up 80%. So you're talking about up 100, down 80, up 80. So it's extremely volatile space if you're going to do the pure plays, which we still think are the best option despite the volatility. But you need to know your risk tolerance. Don't put a significant amount of your portfolio in these stocks if that type of volatility gives you stomach acid, because the worst thing you can do is sell at the bottom, panic and sell at the bottom. If you would have sold at the end of last year, you would have missed out on this huge rally year to date.
So what type of allocation would you suggest to somebody to consider, or range of allocations in the space?
We generally view it as a percentage of your household financial assets. So, once it gets to 2%, it starts to become meaningful. Any less than that, it's almost like, why do it? Once you get over 5%, you have to be really willing to stomach the volatility and really be convinced in the investment thesis. So that 2 to 5 range seems to fit most. Yeah.